Folks, we've got a winner. Canada's largest company has hit a new all-time high following the release of their fourth quarter results. That company, unsurprisingly, is a bank, Royal Bank of Canada to be exact, who beat analyst expectations for their fourth quarter results, leading to their market capitalization pushing past the $250 billion mark in intraday trading. It's bank earnings week, folks, and this is our second video on Canadian bank earnings. Let's dive in. Okay, let's start with the high level. The Royal Bank of Canada, or RBC as most people call them, reported net income of $4.2 billion, or $2.91 per share in the fourth quarter, a 7% increase over the $3.9 billion, or $2.76 per share, reported in the fourth quarter of 2023. $300 million of that improvement was attributed to the inclusion of HSBC Canada, an acquisition which RBC closed on in early 2024. As a quick side note, if you're following along at home and looking at the 2023 statements and going, this isn't right, well, that's because new accounting standards were adopted in fiscal 2024, resulting in the restatement of prior year results and making year-over-year comparisons a pain. Anyways, on an adjusted basis, net income improved 18% in the fourth quarter of 2024, climbing to $4.4 billion or $3.07 per share, versus $3.7 billion or $2.65 a share in the year-ago period. Analysts had called for earnings of $2.95 a share, meaning they handily beat expectations. This net income figure was off the back of $15.1 billion in top-line revenue, versus analyst estimates of $14.2 billion. Return on equity in the fourth quarter came in at 14.3%, which on an adjusted basis grew to 15.1%, a 90 basis point improvement. For the full fiscal year, Royal Bank reported $16.2 billion in net income, an 11% improvement versus the $14.6 billion in net income they reported in 2023. HSBC Canada's inclusion accounted for $500 million of that increase, meaning ex-HSBC, RBC posted growth of about 8% on a year-over-year basis. Earnings per share totaled $11.25 per share versus $10.32 per share last year. On an adjusted basis, net income totaled $17.4 billion, or $12.09 per share for 2024, versus $15.8 billion, or $11.19 per share in 2023. Return on equity for the full year came in at 14.4% versus 14.3% last year, which on an adjusted basis grew to 15.5%. RBC also posted a CET1 ratio of 13.2. Finally, RBC has declared a dividend of $1.48 per share for the fourth quarter, reflecting dividend growth of 4%, the second dividend hike issued by the bank this year. All right, time to get our hands dirty a bit here and dig into some of the finer details of their earnings release. RBC reports their earnings across a total of 6 segments, which is new for this reporting period. The largest segment is personal banking, which reported a net income of $1.6 billion, an increase of $200 million, or 16% versus a year ago. Almost half of this was attributed to HSBC, and once you exclude HSBC from the numbers, the segment improved about 9%, with growth being credited to higher deposits and an increase in loans. HSBC had a larger impact on the commercial banking segment. The segment, which recorded net income of $800 million in Q4, improved by 16% versus the year-ago period. Excluding HSBC, however, the segment actually declined by 5%, with net income of $700,000, as a result of provisions for credit losses growing faster than revenue. Some of the biggest growth was seen in the wealth management segment, which grew 39% year over year to $1 billion, with the growth attributed to higher fee-based client assets as a result of market appreciation and lower credit loss provisions. Capital markets recorded net income of $1 billion, which was flat versus Q4 of 2023 due to higher taxes offsetting any gains seen within the segment, along with provisions for legal. The insurance segment grew 67% year over year. However, it accounted for just $200 million in net income, while corporate support recorded a net loss of $200 million, which was attributed to the after-tax impact of the HSBC Canada transaction and integration costs of $134 million. All right, let's get into my favorite part, the losses. Provisions for credit losses grew by $120 million in Q4 of 2024, an increase of 17% versus the fourth quarter of 2023. The increase here was blamed on both commercial and personal banking, which was slightly offset by releases of provisions within the wealth management segment. Provisions on performing loans increased by $14 million, or 7% versus last year, due to what RBC calls unfavorable changes in credit quality, while provisions on impaired loans jumped by $101 million, or 19%. For the full year, provisions for credit losses hit $3.2 billion, a 31% year-over-year increase from $2.5 billion in 2023. Gross impaired loans, meanwhile, increased from 42 basis points to 59. And while we're talking credit losses, we should note that RBC's residential mortgage book has improved substantially year-over-year. Whereas last year, 22% of RBC's Canada-based mortgages had amortization periods in excess of 35 years, that number has been reduced to 0. Mortgages with amortization periods between 30 and 35 years have increased from 1% to 10%, but it's still an overall substantial improvement. How much of this is credited to lower interest rates versus reworking mortgages isn't really known. That being said, gross impaired loans have increased from $3.7 billion to $5.9, of which $1.7 billion is attributed to personal banking. And it should be noted that this is after $2.5 billion in impaired loans were written off entirely, with the past year seeing a total of $6.3 billion in loans being newly classified as impaired. Maybe the Canadian consumer isn't doing as bad as we thought. All right, guys, this is our second installment of these Canadian bank earnings videos. If you have any thoughts or there's things you want us to look into here, please let us know in the comment section. Also, if you enjoyed this video and found it useful, please smash that like button, subscribe, and ring that notification bell. Thanks for watching, everybody.